Assalamualaikum warahmatullahi wabarakatuh. We are from Group 4 and we will be presenting a topic on tax audit. Here are our group members. And this is the content index for references. There are two types of audit, general audit and comprehensive audit. For general audit, it is held at IRBM's office. It involves issues or adjustment on income and taxes that can be resolved by correspondence. It also involves checking all information on income and expenses, including the types of claim made by taxpayer in their income tax return. For comprehensive audit, it takes place at the taxpayer premise. It involves the examination of business records of the taxpayer. If the business records are incomplete, it may involve the checking or examination on the taxpayer's non-business record, such as personal bank statement. The taxpayer will be given a notice prior 14 days to a comprehensive audit. There are three types of audit under comprehensive audit: general compliance audit, issue-based audit, and special audit. For issue-based audit, it includes expenses claim, capital allowance, and withholding tax. For special audit, it involves electronic trading and international client audit.
Next, the main objective of the tax audit is to encourage voluntary compliance with the tax laws and regulations and to ensure that the higher tax compliance rate is achieved under the self-assessment system. In this regard, the audit officer is required to ensure that the correct amount of income has been reported and the right amount of tax has been paid in accordance with the tax laws and regulations. For the purpose of achieving voluntary compliance, the tax audit activity is one of the measures undertaken by RIBM to educate and create awareness of taxpayers towards their rights and responsibilities under the provisions of ITA.
Next is audit process. There are 6 processes for tax auditing. First is tax venue, second is tax comprehensive, third is the visit, fourth is record examination, next is audit time frame, and the last one is settlement of audit. First process is tax audit. A general audit is carried out at the IRBM's office, whereas a comprehensive review is carried out at the taxpayer business premise. Where the business premise are not suitable, the taxpayer must suggest a suitable alternative for IRBM's agreement. Second process is audit commencement. A taxpayer who is selected for an audit will be notified by IBM through a letter of notification of audit. The period between the date of notification of audit and the visit is 14 days. However, with the agreement of the taxpayer, a shorter period of notification may be fixed by IBM. A letter confirming the visit is usually preceded by a phone call. Other than the intended date of the visit, the letter will indicate the records that should be made available for the audit, the year of assessment to be audited, and the names of audit officers who will conduct the audit, as well as the expected time frame required for the audit visit. The third process is the visit. First, an audit visit is only applicable to the field audit activity. The audit normally starts off with an interview. Second, the purpose of an interview is to enable the audit officers to meet the taxpayer, obtain an overview of the taxpayer business activity, and to discuss the audit. Third, the taxpayer will be asked to explain his business activity, accounting, and record-keeping system. During the audit process, the person responsible for the handling of taxpayer business record will also be interviewed. Next is examination of record. First, access to records and stock. Audit officers can check all business records and physically inspect stock or equipment. Records that are past the assessment period will not be reviewed. Second, for non-business record, for sole proprietors and partnership, non-business record may also be reviewed if needed. Third, no search or seizure. Audit officer will not search or seize any documents. Audits are done at the business premise. Office may photocopy relevant document if required. Off-site record review. If the workplace is not suitable or lacks copy access, record may be taken to the IRBM office with taxpayer consent. All documents will be returned after the audit. Next, record list. A list of documents taken will be prepared. Taxpayer can check and keep a copy of this list. The last one is electronic records. If records are in digital form, hard copies must be provided. If not available, taxpayer must help officers to access and copy digital files. Next, there are two types of record, which is business and other than business record. For business record, is all record relating to the business. Meanwhile, for other than business record, there is a statement of personal bank account, record relating to the purchase of properties, record relating to the taxpayer personal expenses, and other statement, as may be required under Section 79 of the ITA. Record keeping requirement according to Section 82 and 82A of the ITA. Anyone running a business record must keep enough record to clearly show their income or loss. According to public rulings, this record include book of account, financial statement, invoices, receipt, and other documents that support the entries in the books, electronic records, and any other records required by the Director General of Inland Revenue. If a person fails to keep proper record as required under the ITA, it is considered an offence under Section 119A. In such cases, tax auditor may use other method to determine if the correct income has been reported.
Next step is audit time frame. The time required to complete an on-site examinations of record is 1 to 3 days. However, the audit time frame for comprehensive review may be extended depending on the following factors. The audit time frame is applicable only to field audit. The last step of audit process is settlements of audit. After concluding the audit work, the audit officer will prepare an audit finding reports for approval by the branch audit manager. Under certain circumstances, the taxpayer is required to be present at the RIBM office for discussion on the proposed tax adjustment. The audit officer, together with at least one senior audit officer, shall discuss the proposed adjustment with the taxpayer. The taxpayer, without being called by the IRBM, may be present at IRBM office to seek clarifications regarding the progress of the audit process or to give further information. The taxpayer will be informed of the audit findings, which will cover the following areas. If there are tax adjustments to be made, a notification with details of proposed tax adjustment will be issued. The taxpayer will be given the opportunity to state his view and give explanations on the audit findings and the proposed tax adjustment forwarded. A taxpayer is allowed 18 days from the date of notifications of proposed tax adjustment to file an official objection if he disagrees with the proposed tax adjustment. Additional information and copies of evidence should be provided to support his objection. If no objection is made within 18 days from the date of notifications of proposed tax adjustment, the taxpayer shall be deemed to have agreed to the proposed tax adjustment, or where an objection is found to have no basis in accordance with the provisions of the ITA. The taxpayer will be informed accordingly. Subsequently, a notice of additional assessment with appropriate penalty imposed under this subsection. However, if there is no adjustment, a letter will be issued to inform that the audit has been finalized without any adjustment. The time frame for settlements of tax audit should be 19 days from the commencement of the audit. IRBM will inform the taxpayer on the progress of the audit in the event that the case needs more than 19 days to settle. Once the audit case is settled, the audit should not be repeated on the same issues for the same year of assessment. However, if there are new issues to be pursued or new information is received, an audit can be repeated for the same year of assessment.
For the selection criteria, the first one is location. Companies that are located in major cities like Kuala Lumpur, Penang, Johor Bahru and Melaka are more likely to be audited. This is because these areas have more listed companies and higher economic activity, which means it will increase the chances of tax issue. Second one is specific industries. Certain industries are targeted due to their complexity and frequent tax issues. These include property, construction, medical, transport, palm oil, telecommunication and IT companies. They are seen as high risk because of their dynamic nature. The third one is contentious tax developments. Issues like transfer pricing, withholding tax, interest restriction, and reinvestment allowance are often disputed or unclear, making them a focus area for audits. The fourth one is third-party information. IRB may audit if they receive info from another taxpayer that suggests undeclared income or inconsistencies like unreported rental income. Fifth one is risk analysis. IRB use data to compare a company's turnover and profit with industry's average. A big difference between it will trigger an audit. And the last one is previous record. Taxpayer with a history of late or non-submission returns are more likely to be audited because of poor compliance. In conclusion, IRB used these criteria to identify high-risk taxpayer. By understanding them, companies can improve compliance and avoid audit.
And now we will move to the last part of the presentation, which is the assessment and penalties. There are three types of the assessment, which is the first one is understatement of tax, the provision of reasonable facilities and assistance, and the last one, keeping of records. So for the first one, for the understatement of tax, the penalty will be imposed under the section 113 subsection 2 or paragraph 44b subsection 6 subsection b of the Income Tax Act if it is discovered after the commencement of an audit that there has been an understatement or omission of the income. The penalty rate will be 100%, which is equal to the amount of tax undercharged. However, for the first offence, it may consider a lower penalty of 45% to be imposed. And the second one is provision of reasonable facilities and assistance. Under section 80 and 80 subsection 1e, the taxpayer is obligated to provide reasonable facilities and assistance to the IRBM personnel when they are carrying out the field audit in the premises of taxpayers. If they are failed to do so, the offender may be liable to a fine of 1,000 ringgit to 10,000 ringgit or imprisonment for up to 1 year or both. And for the third one is keeping of records. Under the section 82 subsection 1 subsection E stated that every taxpayer carrying on a business shall keep and retain in safe custody sufficient records for as long as 7 years from the end of the year to which business income or adjusted loss relates to. If they are failed to do so, the offender might be liable to a fine of 300 ringgit to 10,000 ringgit or imprisonment for up to 1 year or both. I guess that is the end for our group presentation today. Thank you for watching.